Okay. One second. Let me set my timer real quick.
Go ahead. Oh yeah, shit, I forgot about timing it.
And then we need slides, don't we?
Oh yeah,
Yes.
the visual aid.
Oh, could you enable screen sharing?
I think Rabbit has to do it.
It should allow.
Hello, everybody. Have you ever felt or heard that the oh wait, sorry, my timer. Okay. Hello, everybody. Have you ever felt or heard that the stock market was a rigged game where hedge funds and institutional investors made millions? I've fallen for manipulated stocks, causing me to lose money and feel very frustrated. These mistakes have allowed me to learn and how to protect myself. And today, I would like to help inform everyone here. Today, I will go over what stock market manipulation is, how hedge funds and institutional investors manipulate stocks, how to tell when a stock is being manipulated, and how you and I can protect ourselves. Before we get into how we can figure out if a stock is being manipulated, we first need to learn what stock market manipulation is. First off, what is stock market manipulation? According to Hayes Adam manipulation definition, methods, types, and examples, market manipulation is conduct designed to deceive investors by controlling or artificially affecting the price of securities. Manipulation is illegal in most cases, but it can be difficult for regulators and other authorities to detect and prove. Today, I would like to go over the three main types of stock market manipulation. The first kind is news manipulation. And what news manipulation is where for example, or you guys could go on Twitter and start tweeting on why we hate Tesla and why it's the worst stock ever, and everyone should sell it because it's going to go out of business. That right there is news manipulation because you're trying to lie and spread false news to affect the price of the stock. What hedge funds do is like a more richer version of it, and they will just pay media or newspaper outlets to sell false news to affect the price of the stock. According to detecting fake news designed to manipulate stock market, social media is increasingly used to spread fake news. The same problem can be found on capital market. Criminals spread fake news about companies in order to manipulate share prices. According to Fears for the Future of American Journalism, as hedge funds flex power, hedge funds or private equity firms now control half of U.S. daily newspapers, including some of the largest newspaper groups in the country, Tribune, McClatchy, and Media News Groups. The next form of market manipulation is known as wash trading, and what wash trading is where a hedge fund will go on one brokerage and like sell 100,000 shares and then buy 100,000 shares on another brokerage. And that won't move the price of the stock, but it creates heavy volume. And that is what a lot of scanners and indicators use as part of the algorithm. And then it'll bring it up on our watch list. And that will just create more activity for the stock, driving up the price. According to Chen James, wash trading, what is it and how it works with examples? Wash trading refers to an illegal activity in which single traders buys and sells the same security in order to generate misleading market information. Wash trading is often performed to artificially inflate trading volume of a security. Why would someone do wash trading? In some cases, wash trading bolsters the trading volume of a security or potentially inspiring legitimate trade activity. Wash trading can also be used to help artificially boost the price of a security as part of a pump and dump scheme. Um, the final type of market manipulation is stop loss hunting. Hedge funds have access to a lot of tools and resources that you and I don't. And one of those resources are stop losses. And what hedge funds will do with this information is they will see where the majority of people's stop losses are. And what they will do is they will start a short position, sell off a bunch of shares, and that will cause a downward trend in the stock price, and then they will do everything in their power to try and hit the stop loss because once it hits the stop loss, it will just drop the stock even more because everyone's sells once it hits that stop loss, and eventually when it drops at a low enough price, they will buy back in. According to Ben Clay, How to Avoid Stop Loss Hunting, stop loss hunting occurs when market participants, often large players or market makers, intentionally manipulate prices to trigger stop losses orders placed by retail traders. They drive prices to levels just beyond common stop loss placements, causing these orders to be executed. The manipulation aims to induce forced exiting or purchasing by retail traders, generating liquidity for manipulators' positions. According to Bullshit Henry, Will Kramer's crazy confession destroyed his career. Jim Cramer, as an ex-hedge fund manager, said, "A lot of times when I was short my hedge fund, meaning I needed the market to go down, I would create a level of activity before the market opened that could drive the pre-market futures down." As you could see, there are 3 main types of market manipulation that, if you were not careful, could fall into. After talking about the different types of market manipulation, it is now time to speak on why market manipulation is at an all-time high and how you and I can protect ourselves as well as others. After the GameStop and AMC situation, retail investors will now blindly invest in stocks that other traders are in. And after the whole GameStop incident, hedge fund traders now realize the true power of what a bunch of investors can do. And what they will do now is that they will try and pay influencers with a bunch of subscribers to try and promote a stock that has way more potential than it actually does. And um, according to Investors Beware, on the market impact of a short squeeze, one of the biggest risks feared on Wall Street after the GME and AMC short squeezes is the threat of market manipulation. This happens when there's a abuse in the market of deliberate attempt to interfere with free and fair operation of the market, including the apparent misleading of stocks' true value. The aforementioned short squeeze showed the possibility of how severely the market can be manipulated due to the power of a crowd. So, how do you protect yourselves? According to 5 market manipulation tactics and how to avoid them, the best way to think about manipulation is to accept it as part of the market structure. As retail investors, we cannot control or change how the big boys play the game. Understanding that manipulation can work for or against you, depending on your position, helps remove worry about these sometimes unethical or illegal practices. The best way to protect yourselves from the stock market manipulation is to think long term. Understanding the types of manipulation can also help. Another thing you could do is not really trust anybody. Take financial advice with a grain of salt. And just invest for the long term. Hopefully, from this, you fully understand why market manipulation is at an all time high and why long term investing and doing your own research is the best way to fight back. Now that we have gone over what market manipulation is, tactics hedge funds and institutional investors can use, and how we can protect ourselves from those tactics, it is now time to conclude the speech. At a time where market manipulation is at an all-time high, always make sure to trust your own instincts. Take financial advice with a grain of salt. Stay informed while thinking long-term. Keep learning, keep questioning, and keep investing in what you believe in. All right, that's the speech. How do I?
That was good.
That was so interesting.
I know, isn't it?